Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, March 3rd, 4:56 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with the Big Show, the Friday edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at what's important for next week, and update the world famous 21 over 21 leaders list. Let's dive right into it. A much more pleasant video today than any of the ones I've done over the last month. As you can see, the caution is gone from the market state. We're just showing uptrend now after the action of the last 2 days. A big goal line stand for the Bulls, but you could argue that not only was it a goal line stand, they forced a fumble and returned it above to the 21-yard line. Let's say that. Let's use a football analogy and work in a moving average. So we'll go through all this, and if you're wondering what the heck I'm talking about, I'll explain it all momentarily. Let's check over here on the trend gauge. Bullish leaders acting just fine. In fact, they held up very well during the entire index correction. That gave us the the conviction that we needed not to totally run for the exits while we were breaking the moving averages on the indexes. As long as leaders are holding up, you've got a glimmer of hope in the market. And then when the indexes cooperate, it's like adding gas to the fire. And you saw that today. If you bring up basically any leading stock and the indexes, and it's a sea of green, including all 11 sectors, just a good broad rally. Small caps participated mid, the Dow, the Nasdaq 100. Just a day that the bulls were calling for, and we got it. So short term, we've improved the arrow from downtrend to neutral. We go to green when we get a second close above the 21 on all the five major indexes. Today was just day one of the close above there. Medium term 50-day moving average for the five indexes above. The Dow still lagging, but playing catch up. Long term, all five of the indexes are above their 200-day moving average. The slopes of the line flattening out and trying to turn up now. Been saying that for a while, but maybe we finally have a shot at doing it. So what happened? What happened today? Let's call it the Bulls trifecta. Stocks up, dollar down, yields down. Yields look like they put in a big reversal today, and we'll call it an island top for yields. You'll see what I'm talking about when I go to the charts. But bulls really couldn't have asked for much more today. All sparked at 135 yesterday afternoon with some seemingly innocuous comments by a non-voting Fed member, and that's it. Stocks just stopped going down after undercutting and reclaiming the 200-day moving average on the Nasdaq 100 and the S&P. They closed strong yesterday, followed that up with a gap up today. Little test at 10 o'clock as some data came out, but a trend up day after that. Like I said, anything the bulls could ask for, they pretty much got today. So all green today. G6, this is our six composite of our six ETF growth stock composite up 1.87%, S&P up 1.6, Nasdaq 100 up 2.1, Dow up 1.2, mid caps up 1.1, Russell 2000 small caps up 1.35, global diversified 60/40 stock and bond up 1.15, GROTECTION in-house up 1.46% today. We'll go through the tail of the tape and the updated 21 over 21 leaders list. And boy, was it a shot in the arm for bulls yesterday. This is why you always have to keep your watch list ready, your buy points ready. You never know. I mean, this time yesterday, well, let's go back 27, 28 hours, 1 o'clock yesterday. At that point, we had just undercut and reclaimed the 200-day moving average, which is right around here. It's at 39.40. We reclaimed it, back tested it. Look at all these knocks on it, 39.40 right here all throughout the day. And then finally, they gave up a little move to the upside, and then 135 blast off above 39.50. Strong close, gap up today. ISM data came out at 10 o'clock, a little bit of a squiggle, making the lows of the day, but then blast off again. Trend up day, closing near the highs of the day. sometimes this it boggles the mind what the market is capable of doing in short periods of time, including just absolutely turning on a dime when it needs to. You never know what's going to happen. Anybody that tries to predict, it's futile. But we've been talking about this setup that we wanted. That was stocks coming down to oversold. We wanted to see the stochastic turn up. We got that. Yesterday, I talked about how we got no cooperation, however, from rates in the dollar, but we did get that today. So, some things we want to note on all these charts I'm going through. First of all, the stochastic turned up not only on every one of the G6, but also on the five major indexes. We bounced at the 200-day moving average, reclaimed the 50 and the 21. Above the 21 on all five of the moving averages, are the five major indexes. And let's see what next week brings. But the best part about this to me is that it gives a very clear line in the sand to control risk. We absolutely should not break back below 39.28 on the S&P 500. That's the line in the sand. We should not go lower than that. If we do, we have to completely change what we're seeing in the market. But with all the strength and that we're seeing out of leaders and the strength in the indexes off the low here. Wouldn't be surprised if we went sideways for a little bit, but any pullback should absolutely be contained, ideally by 4,000 and the 50-day moving average. But at the worst case, this 200-day moving average, which was up 18 cents yesterday, down 21 cents yesterday, it's flattening out. If we continue to go higher, it's going to curl up, and that'll help to contain any pullback as it's just a natural area for buyers came in yesterday. They added more today. Like I said, if rates and dollar continue to cooperate, we could be headed for a nice run higher here. So there's the S&P 500. Let's go to the NASDAQ 100. That also undercut the 200, reclaimed the 21 today. Stochastic hookup, just like we want to see. Let's go to the Dow. Here's the ETF DIA, stochastic hookup. Um, Back above the 21. 21's curling up higher now, going to come through the 50 next week if this continues higher. This is the only one of the indexes that's below the 21. But now you can see after some underperformance here for a while, it's uh, acting in line with the S&P as basically the relative strength line is flattening out. Let's look at mid caps. A little bit of underperformance the last 2 days, but the outperformance leading up to it allowed the bigger indexes to catch up. But we did exactly what we wanted. This declining 21 for 1, 2, 3, 4, 5 sessions had been acting as resistance, a clean break above it. Any pullback, we should hold this 21-day moving average, also a stochastic turn up. IWM, same thing, declining 21-day was resistance, blasted through it with gusto today. Uh, Stochastic turn up there also. A lot of good stuff since 135. Very strange, but we'll take it. Declining trend lines basically broken on the indexes also. So there's the major indexes. Now let's go to the VIX. We also got what we wanted out of the VIX, which is a break back below the 50 and the 21-day moving average and this 20 level, all the way down to 1853. The bears simply can't believe this. They were counting on a volatility event to happen, but it didn't happen. Now UUP, the dollar, still trending right on the ADMA, didn't make a lower low versus Wednesday, but this 200-day moving average resistance, note the relative strength line turning down, note the stochastic, which came down right to the 80 level, the borderline between overbought and not overbought. We had a little hook back up yesterday, but back down today. We want to see this continue, come back below 80 and head down, a decreasing dollar. Now remember, very important, the dollar goes higher when there's fear in the worldwide markets or economy. If that fear starts to dissipate, whether it's rates coming off, whether it's uh, inflation data coming off, if people, businesses, hedge funds, pension funds, mutual funds get more confident, the dollar will come off, and that will be a tailwind for stocks going higher. Now let's go to bonds. We'll start with TLT. Big move up, first clear of the ADMA. Really big move up, 2.4%. Let's go to junk bonds. up 1.03%. Remember, these move more in tandem with stocks than they do with bonds. The broad bond index BND up 0.77%, a pretty big move for bonds. Corporate bonds LQD uh, moved above the ADMA also. We got the hook up on the stochastic on all these. That's another benefit to stocks because this means that the price of this and the stochastic continue to go higher. That means rates continue to go lower. First, let's look at the 30-year. And here's this island top that I'm talking about. We tight closes leading up to it, looked like a breakout yesterday. From failed moves come fast moves in the opposite direction. That's an old Wall Street saying, and you might be witnessing it right here. Stochastic crossed over from overbought, big move down, and this is just an island top here now, this yesterday's bond yields. Let's go to TNX, 10-year, same thing, island top here. Stochastic hasn't come off of overbought yet, but it is pointing down, still along the ADMA, but looking like an island top there. So if this action continues and rates continue to come down, that's another tailwind for stocks. Let's go to gold now. Maybe gold foreshadowed what was going on. This is the first one to move, and it kind of bucked the dollar going sideways. But gold up now 4 out of the last 5 days. Remember how we talked about how oversold it was? Just, I mean, frankly, I was talking trash about gold, about how bad it was, but not anymore. It's curled back above the 8, back above the 21. The stochastic came off. Change my opinion if price changes. I got no problem with that. Same thing here on gold stocks. 5 days up now into the declining 21. Maybe time for a rest. Maybe it blasts right through it if the dollar continues to stay weak. Silver, stochastic hook up, not as strong, but when it was acting as bad as it was, we'll certainly take it. And finally, Bitcoin was down overnight and continued down today. This is because of that Silvergate Bank. It was a main crypto clearing bank. Looking at bankruptcy, and that has impacted Bitcoin down 5.5%. You don't have to be worried about Bitcoin if stocks are acting fine. And um, well, I've got my own thoughts about cryptocurrencies. There's like 9,000 of them, and 8,995 of them are complete garbage. So those are all the major indexes that we track in every video. Let's go to the tail of the tape now. You can pause it here and read through the whole thing. I'm just going to hit the highlights, and then we'll go to the 21 over 21. All the stochastics hooked up. The NASI RSI is at least neutral. I'm waiting for the chart to update. It doesn't update till like 6 p.m. Eastern time. Dollar overbought, down, green arrow, that's good. Island top on rates, also good for stocks. Back to the bull case, the bear case. Now we need to see a break below yesterday's low on the Nasdaq 100 and the S&P, which is 39.28 and 288. It's not often that the levels are this clear, but they are to me, based on my reading of the charts and the action that we saw yesterday. Some news that ISM came out, it was higher than expected. The market turned south, made the low of the day though within 15 minutes, and then reversed higher and trended higher for the rest of the day. Good stuff there. Day count from up 1 to up 2, and we flipped the 80 EMA and the 21 EMA, our first close back above those. Expectations, my expectations were based on what the indexes did on their moving averages. Now back to positive as we're above the 21-day moving average. Reclaim the 21, as I said, on the levels here for the S&P 500 and the Nasdaq 100. 11 out of 11 sectors today. XLP staples barely up. If you want a sector to be lagging, I'll take staples every day of the week. Because it's defensive. That means money flowing into growth stocks, which is what we want to see. So bond prices up big, bond yields down big, dollar down. These focus lists, this is what we still own in-house. We upped our exposure from 1.02 to 1.27, adding twice to SSO and also adding to PanW and ANET. And as I said, the bottom line trifecta for the bulls, stocks up, back over the 21, dollar down, yields down. Let's see what next week brings, but definitely a good start, a good 2-day start for the bulls here. Let's move on now to the 21 over 21 list. And first of all, we'll cover the two stocks that got punted off. We had one, two, three, four, five that undercut but reclaimed the 21 by the end of the week. But what we are kicking off is SARK, which is inverse Kathy Wood. And it broke below the 21. That's good. That means ARK K is acting well, and this is a great way to get growth exposure to really not the best quality of stocks outside of Tesla. There are some garbage charts in there. But if the market is going to run up and it's a strong bull run, this is going to do very well. It ran from late December from 29 to 45. That's a 50% move in ARK-K over 5 weeks. So something we're considering adding to the portfolio to cover the let's call it the animal spirits of growth stocks, because it outperforms when the G6 is going to outperform, and we got a buy signal on all six of the G6 today with the stochastic hookup and the move back above the 21. So SARK was booted. The other one that was booted was TBT. This is moves up with yields. It's the inverse TLT. Didn't break the 21, but that island top, same as yields. I don't want this anywhere near a leaders list because I'm not expecting it to lead going forward. So the two that were added, we'll start off with them. Very solid stocks. Anything that we own is flagged with a red flag here. We'll start off with the newest ad, Melly. Great reaction, to break out of this base, pulled back, and then good price action after earnings. Halfway between the top of the pivot and um, the goal, the 20 to 25% goal from the pivot. But to me, this is still buyable. You just temper your expectations a little bit. If the market's going to run, institutions will. This is the type of stock they like to pile into. First Solar, we made 3 buys on this yesterday. We're rewarded today with a nice 6% up day. Massive increase in their earnings in their report yesterday to day 3 higher high after breaking out of this stage 1 base. These are the types of stocks that you want to pile your money into. Uh, Growth stocks in an uptrend breaking out of a stage 1 base are the basis of CanSlim. SMCI didn't participate the last 2 days. Strangely, it was a leader, broke out, pulled back to the 21, but for whatever reason, didn't participate the last 2 days in the move up. So a little bit of a red flag there. Palo Alto, we added more to this today, making higher highs since its gap up on earnings. This is exactly how you want earnings gaps to work out. They go up a little bit, don't necessarily have to take off. It's great if they do, like First Solar, but pull back, bounce at the ascending 80 MA for the first touch. Couldn't ask for anything better than that. We do own that. Net, still have a very small position in this. Frankly, it didn't act as well as I wanted it to, but I'm still very much noticing these huge volume bars uh, since its earnings report and the lower volume pullback on it. This thing has the potential to just blast off to the upside, and I'm seeing the stochastic hookup from oversold. ANET, we added also to this yesterday. Uh, 3 nice bounces off the 21 during the pullback. Very nice candle on its earnings report, breaking out of, it says stage 4 here, but on the weekly, it calls it a stage 1 because there's a base missing on the daily that undercut. The daily and weeklies don't always correspond, but I'll take stage 1 for this. Going by the weekly chart, it did form a deep enough base in a correction, and it had enough strength coming up the right side of it and a great earnings reaction. It's also got relative strength near the new highs. Relative strength hooked up. It never even got to oversold during this most recent pullback. TMDX, we also own this, continues to act great since earnings. It's a little bit on the thin side, but we are still trying to make adding to our position on any weakness on this stock. GFS got stopped out of it last week, but it still managed to hold on to the 21 over 21 list. Not the strength of some of the other stocks, but the stochastic hooked up also. Airbnb, finally, after more weakness than I wanted to. We had as much as a 7% position on this, cut it back to 3%. We'll be looking to add to this if it starts to act better off of the 21 the way it should. Notice the nice big volume bars on the move up, lower volume on the pullback, and it held at the 21 right where it's supposed to. ALGM bounce at the 21, making a higher high. Nvidia, we had a 4% position in this, sold 2% of it yesterday on that move below the low of the gap day, but all that did is separate us from our stock. We'll be looking to add back to this after the action the last 2 days on that supposed shelf offering that they put out. American Express, tight action along the 21, blasting off of it today. ACLS, monster shakeout yesterday on the Tesla silicon carbide comments, but it looks like it righted itself and is back in the leadership good graces. ELF continuing to trickle higher. DT undercut for 2 days, reclaimed it today. Stochastic hookup hasn't this offering, the secondary that it did, seems to have thrown cold water on the action, and there might be better stocks. And uh, this one just made it by a thread, holding on. AI, man, this thing. First of all, they've got a great CEO, Tom Siebel, from back in the day, 20 years ago. He's got a very good reputation on Wall Street. This stock got way ahead of itself on what's basically just an AI love fest for a couple of days here, pulled all the way back for a couple of weeks, actually, pulled all the way back. Reported earnings yesterday, very well received, up 34% on 364% above average volume. I'd like to see a handle come in here. This thing is a very wild stock, however. Tesla looking to add back to this after this 1 day below the 21. Didn't really act as good as I expected it to today. Back above the 21, but it ran into the 8 and the 200 level and couldn't get back above there. That's what I want to see. Also like to see the stochastic hook back up through the moving average, but I understand it's below the 200-day moving average, but no stock exhibited the buying that Tesla did in this 3-week period here before it started going sideways over the last 3 weeks, and it certainly has all of the opportunity to be a big leader. RVNC, we survived the shakeout on this, back above the 21 today after its earnings report. GE continues to be, all industrials are acting good since the big China data, frankly, and this has growth type fundamentals now on the earnings side with a 78% earnings increase projected for 2024. Five below, undercut, reclaim the 21. And Iridium, we're still holding the smallest, very small position on this. I got very excited about this day two volume signature. You don't see that very often. And then it pulled back along with the market, but bounced at the 21 just the way we needed it to. We're seeing a lot of this exact pattern move up and then pulled back over the last 2-3 weeks, bounced right at the 21, and now starting to reclaim the 8 and go higher. There's at least 50 stocks that have on my list that have this type of pattern, and that's going to wrap it. That's it. And quick reminder: why do we do what we do here at Revere? Why do we bother trying to follow the trend? Why don't we just put it in a 60/40 portfolio and tell everybody to think long term? And the reason is because you can get your behind handed to you if you don't get out of the way during bear markets. All of these bear markets occur under the 200-day moving average. That's when we get ultra conservative and get the heck out of the way. That's what we did during 2022 to keep the powder dry. Yeah, we were down 12%, but that's less than half of what the market was down. And now we're ready. The market looks to possibly have made the turn the last 2 days. We've got good footholds in 10 leadership stocks along with the indexes, and we'll ride that wave higher as long as it goes. And if you're interested in an approach like this, reach out to me, Don at revereasset.com, or my partner, Dan Stewart, Dan at revereasset.com, or call us at 855 Real Wealth. That's 855 732 5932. Remember, it's not how much you make in the markets, it's how much of that you can keep. We've had the transition now from a bear market back to a bear market rally that transitioned into an early bull coming off the low. Then we had a 4% pullback that moved into a mild correction at a 6% pullback. Now we're back within the 4% threshold, trying to, and if we make new highs, then we'll go back to the expectation will be the bullish market here. And then hopefully some nice outperformance from leading stocks the way it happens during a bull market. That's what we're looking for. And with that, I'm going to wrap up the week ending March 3rd. As always, love to hear your feedback. You know the contact info. And so uh, that's it for the week. Nice turn. Nice to close the week this way and not on the down notes that we have been over the last 4 or 5, actually the last 4 weeks since we topped on the 3rd of February with the strong jobs report. So we had a 6% pullback, held at the 200-day moving average, bounced off it strongly the last 2 days. Let's hope we get some follow through to that next week. But as always, we're prepared for any outcome here at Revere. So thanks for listening, everybody, and have a great weekend. This is Don Vandenbord telling it like it is, just the facts here at Revere, and the facts got better over the last 2 days. Have a great weekend, everybody.